make way for the super app. Buy now, pay later giant Affirm today debuting a brand new and improved destination where consumers will have a one-stop shop option to manage their finances, make purchases, and even invest. They're also announcing a new Google Chrome browser extension, which will allow consumers using Affirm to make purchases not just from Affirm partners, but essentially from any website.
Hello. Back in August 2021, I released my first deep drill into Affirm, a buy now pay later fintech company that was on the verge of explosive growth following their IPO in the same year. Back then, they were trading around $65, and I reckon that they were on the path for explosive growth. In my second video update on Affirm stock, my bullish thesis was fully confirmed when I released the video back in September. They had already reached a price of $125 at the time, representing a 2x on my first initial drill, which was when I loaded in the boat. Then the stock continued to run up till it hit an all-time high of $180. At that point, it was necessary to take some winnings and profit off the table. However, since then, we have only seen big downside on Affirm stock to where they're trading at today at $35. But something is finally telling me the reversal is in line. So I think you're going to want to stick around for some technical indicators that I'm finding very interesting that could literally mean the stock is about to reverse big. Stay tuned for this and more. Keep it simple. Okay. So on the 10th of February, just over a month ago, Affirm released its earnings call and the stock plummeted 21% to the downside and further receded down to where we are roughly right now at $34-$35. What on earth happened at this earnings call? Was it all that bad?
As mix changes, as you pointed out, deconcentrating from some of our strengths in home fitness, which is, by the way, still going really, really strong, you will see this mix change. And over time, it'll of course normalize because ultimately the same dollars of revenue will come in. But mix is something that our investors have to understand pretty well, and you'll see it play out very well over the next several quarters. The active user base went up 1.5 times, so it's enormous, and the frequency of transactions went up at the same time. If you think of it, these are a huge number of new users we're adding, so they only really had a chance to transact just once. And yet the transaction per user number is also up. So you see frequency continue to happen. And so it will over time build. And of course, there's a massive network effect as we cross-sell our merchants to our consumers. So over time, this accretes very, very significantly. But you're completely right. Revenue recognition of interest income stretches over multiple quarters, depending on the term that the consumer chooses, while a lot of the home fitness that was so incredibly popular during the pandemic is recognized on the spot.
For this video, I just really want to quickly talk about some of these numbers. Now, according to Fintel, the institutional ownership of Affirm stock has gone up to a ridiculous almost 60%. That is huge. If you consider that Affirm only went IPO last year, then this number right here represents some huge, absolutely gargantuan institutional buying. Now, if you look at who's buying, you can see that Capital Research Global Investors lodged on the last Valentine's Day of 14th of February that they have 19 million shares, and the increase of their shares has gone up by 33, almost 34%. And it's the same for the second largest institutional owner, Bailey Gifford & Co. And they increased their ownership by 51%. Wow. What about Vanguard? They increased by a whopping 65%, and it's the same for Morgan Stanley. Okay, you have one institutional owner who had reduced their ownership by 28%, but then you have this growth fund increasing by a ridiculous 125%. So they're more than doubled their stake in Affirm stock. And it goes on. You have Vanguard again increasing by 60%. And look at this. You have BlackRock doubling up their position in Affirm stock. Something must be going down big. Now, did you notice who else has loaded the boat? A brand new position opened on the 14th of February. Founders Fund Growth Management LLC, aka the investment arm of Peter Thiel. And also, who have we got here? None other than Jim Simons and Rentec Technologies, to the tune of close to 1 million shares. All of the big guns, it seems, are now loading the boat on Affirm while it's trading at these low prices. It only means one thing for me, which is the stock is seemingly grossly undervalued. And when you look at the graphics of these metrics, you can see clearly on Market Beat the huge institutional inflows over 2021, which are absolutely monumental. Now, if you watch my first video last year on Affirm, you will know that one of the points of my thesis for a bullish run was that the fact that Affirm stock was hugely shorted. What is the short percent on float now? It's at close to 8% according to Fintel, but it's higher when you look at another site such as shortsqueeze.com, where it's recorded at 13.78%. One way or another, the stock is still being heavily shorted. Now you may think 7.9 or 8%, that's not a lot. Well, in fact, for a stock to be shorted this much, it is huge. 7.96% is a huge short position on a company. And it's evident when you look down here at the dark pools. This is just crazy numbers right here across the board. Since March the 4th, the dark pool short volume ratio has been at 58.95%. That is just crazy, and that is why the stock has been absolutely pummeled to where it is now at $35. It is just artificial, and it gets better when you look at the fails to deliver. They are astronomical. Look at this, 117,590 shares failed to deliver on the last reported date back in mid-February. The numbers, I'm telling you, that are going to come out for the end of February to now are going to be crazy, considering the stock and its price action over the last few weeks. Now, talking about short interest and the historical short interest, I find it's very interesting, and this is like a red siren for me. If you look at Market Beat, where it's very well documented, the Affirm short interest history dating back to exactly August last year when I first drilled into the stock, it had a high short interest of 8.4%. Now that formed a basis for my bullish thesis on the stock as a quick stop pop, right? And then it was trading at $65. What happened to the short interest thereafter? You see, it went down to 8.1, and the stock already improved by $30. Then it continued to go down to 6.5, 7, 5.9, 5.1, where it hit an almighty $147. But then we know it went to an all-time high of $180, right? Then the stock has been going downhill ever since. And what's been going on with the short interest? It's been slowly going right back up to 8.6%, which has put us almost right back to August time. Something's telling me that the stock is likely to pop in the near future on these kind of numbers, as long as their business is generating revenue and is growing. Given time, Affirm will rise to all-time highs in the near future.
You've got to figure that as prices go up, people are finding themselves stretched because they aren't getting the government stimulus anymore that they got. To
summarize, Affirm stock at $35 is looking very juicy for me, and I will likely add back in some more shares at these prices. So please take my drill with extreme precaution, as this stock is technically on a huge downward trajectory, but do know that it has already gone lower than its IPO price and its all-time previous lows back in May of 2021. So there is no more previous support level, and this stock could continue to tank. who knows? But in the long term, I really think Affirm has what it takes to rise back up. Thanks for watching, and if you found this quick drill informative, then please do me a favor, a simple favor, and subscribe to this channel so you can get an update when a new video is uploaded. I am a simple trader and I'll try to keep this simple, and will simply see you in the next video.